Okay, let's talk about the US housing market because right now it's kind of confusing, isn't it? You hear that prices are at record highs, but then you also hear they're falling in some places. So what's really going on? We're going to crack open the data from the third quarter of 2025 and figure it out together. All right, here's how we're going to break it down. First, we'll start with the big picture, the 30,000-foot view of the whole country. Then, and this is where it gets juicy, we'll zoom into the four major regions. After that, we'll get into the why, what the experts are saying. And finally, we'll bring it all home and talk about what it actually means for your wallet. Okay, so let's dive right in with that big picture. If you had to pick one number to sum up the entire US housing market right now, what would it be?
It's this one, $426,800. Wow. That is the median price for a single-family home across the U.S. right now. And, that number really sets the stage for everything else we're about to talk about.
And believe it or not, the overall trend is still pointing up. Get this, in a whopping 77% of all metro areas, prices are still climbing. And what's really wild is that percentage is actually higher than it was just last quarter. So yeah, that upward pressure, it's definitely real. But here's where it gets a little weird. Even though prices are rising in most cities, the overall national growth rate is surprisingly calm. We're looking at a 1.7% rise year over year, which is the exact same pace we saw last quarter. So this isn't that chaotic, super fast market we saw a few years ago. It's more of a slow, steady burn.
Okay, and this is where the story gets really interesting. Because that calm national average, it's basically hiding a huge storm of differences depending on where you live. So let's break the country down and look at these four very, very different housing markets.
I mean, the divide is just stark. You've got the West, where the median price is over $630,000, and then you have the Midwest at just over $330,000. That's a massive difference. But, the price tag is only half the story here. The real shocker is when you look at the annual growth.
Yeah, this chart really tells the whole story, doesn't it? The Northeast is just taking off like a rocket. Prices are surging 6% year over year. The Midwest is looking pretty healthy too. But then you look at the South, it's basically stalled out. And the West, it's actually dipping down just a little bit.
And this brings us to a super interesting paradox. Think about it. The most expensive place to buy a home in the entire country, the West, is the only region where prices are actually dropping a bit. Meanwhile, the Northeast is just on fire. It's really a tale of two or even four completely different markets.
So the big question is, why? What is causing this huge split across the country? Well, to figure that out, let's see what the experts at the National Association of Realtors have to say.
Their chief economist, Lawrence Yun, really hits on the central tension of this market. He says that even though home sales are struggling, prices just keep on rising. And what does that do? It builds up record-high housing wealth for people who already own homes, but it makes it really tough for anyone trying to buy in.
And here's the number one reason why, according to Yun. It's something he calls a supply-constrained market. It's pretty simple, really. In places like the Northeast and the Midwest, there just aren't enough homes for sale to meet the demand. It's classic economics. Way more buyers than sellers, and that means prices can only go one way, up. But the South? That's a whole different story. They've had a ton of new construction lately, which means more supply, and that's helped cool prices down. But Yun doesn't think this is a bad sign at all. In fact, he calls it a second chance opportunity, like a temporary window for buyers who might have been priced out before to jump back in.
Okay, so we've got high prices, these crazy regional divides, and major supply issues, but what does all this abstract stuff mean for you, for your bank account? Let's get down to the bottom line. What does the monthly mortgage payment actually look like?
All right, here it is. If you're a typical buyer and you put 20% down on that median-priced home we talked about, your monthly mortgage payment is going to be $2,187.
So what does that feel like in a family budget? Well, that payment takes up about 24.8% of a typical family's income. So yeah, just under a quarter of your paycheck, gone, every single month. That's a pretty significant chunk.
But here's another one of those interesting little twists. If you look closer, that monthly payment is actually down a little bit from last quarter. The catch, though, is that it's still up from where it was a year ago. So we're getting a tiny bit of relief right now, but the bigger long-term trend is still that costs are going up.
And all of this leads to a conclusion that might actually surprise you. Even with these crazy high prices, affordability has technically improved. How? Well, when you factor in that people's incomes have also gone up, the burden of that monthly payment has eased just a tiny bit, both compared to last quarter and even to last year.
But, and this is a huge but, that little bit of improvement doesn't really help everyone. If you're a first-time homebuyer, the story is way tougher. Even if you're buying a cheaper starter home, your monthly payment is almost the same. But for you, it eats up over 37% of your income. That is a much, much heavier burden to carry.
So where does that leave us? It's a real puzzle, right? You've got these record-high prices clashing with affordability that's actually slightly getting better. You have some parts of the country cooling down while others are just getting hotter. So does this incredibly complex, divided market really represent what the expert called it, a second chance opportunity for buyers? That's the big question we're all left with as we see what happens next.